Hey everybody, it's Pete. Welcome to a new episode of today's best stock picks. I got caught off guard and I'm the one who pushed the button. It's Thursday, September 17th, 2020. The market's looking lower today. The FOMC had the announcement yesterday, and we actually mentioned in yesterday morning's pre-market video of best stock picks that the days after the FOMC announcement are usually pretty good days to trade. You have a fresh catalyst with a lot of meaning, and you typically get follow through. At the very least, we should get volatility. Now, whether or not we follow through to the downside remains to be seen. However, what we will have is stocks to trade on both sides of the market today. So watch those two videos that we've done recently, especially the one from this morning about finding short sale opportunities, which we're going to discuss a few of those. Now, this could potentially be the first sign of the market heading lower. Trading lower and staying there is not the same thing, and that's really the big thing to pay attention to today. I got really like this alfalfa thing going. So we're going to take a look first at the big stock that IPO'd yesterday. I don't normally talk about an IPO, but it seems to be having a lot of conversation today, which is Snowflake. Obviously, only 1 day's worth of price action, so we're going to kind of drill down a little bit from a day trading perspective, what you could have done yesterday, what we're looking for today. And obviously, then we'll jump into some stocks on the long side and on the short side, as well as we're going to take a look at Apple and say, Apple had an event this week and not much changed. Has the tune changed in that stock? Will it be on its way down to $100? Interesting stuff going on. So we're going to head over to the charts. We're going to start out with Snowflake and then break it down. So obviously, 1 day's worth of price action, but we're going to actually go down to the daily time frame, the intraday time frame. So essentially what we're going to do is we're going to walk through as if we were day trading the stock together, and everything we do, we start out here. We need a line in the sand. We need the first print of the day, and that's going to tell us if today's order flow is bullish or bearish, is today's order flow in sync with the higher time frames. So what this actually does is it will keep you out of trouble when there's a stronger bias. Obviously, there's no bias right now, and opened up much higher than what was expected, and you can see it's actually trading lower again today from where it closed. So what's interesting here is that we had this really clean push out of the gate. But what's fascinating to me is some traders emailing me and messaging me yesterday about riding this move to the downside. And I'm like, well, where was the entry signal? There wasn't an entry signal to be long. It just opened long, traded higher, and didn't give you a spot to get in. We get a lot of questions about why are we looking for that specific signal, which if you're watching this or if you're in the boot camp especially, you know the signal I'm looking for, and it's right on the screen there, and it did not give us an entry signal. So there was really nothing to do. We actually didn't get an entry signal until we got back above the opening price, and there was a good short-term trade there for roughly $20. Then the rest of the day, it kind of just meandered sideways. So if you're going to be day trading this right now, obviously there's no swing trading history here or opportunities. If you're going to be day trading it, make sure it matches that strict criteria to be looking for a spot to buy. But more importantly, with the market down, especially big right now, pre-market, make sure that you have a risk point in this trade that if it continues to the downside, you're out of the position. There's too many traders that I see right now, especially influenced because of the price action for July and August. If you happen to be watching this and talking about July and August of 2020, where they were seduced into this false theory that the market can't go down and the market will always bail them out and the Fed will always bail them out. I got news for you. I was pounding the table on it day after day after day. That's not reality. What we experienced was an absolute gift during July and August. Now you got to put on your overalls and get your nails dirty. You got to get some dirt under your fingernails. You got to get some calluses, and now we got to get to work and act like a trader. And that means that we got to really be on top of bullish, bearish, and exactly when to get involved. Looking at Snowflake today would be pretty interesting. If you're a new trader, probably want to stay away from it because it can move pretty fast, but definitely something to keep an eye on. So that being said, with the futures now down 40 points at this particular moment, which means that we're down here, what does that mean for the SPY? So first we're going to take a look at the SPY. We mentioned it yesterday. The SPY is kind of like in this phantom zone now where it's between the 20 and between the 200. This is a potential change of trend, not a change of trend. It is an area where having conviction as a buyer is a lot lower. So how does that translate? Well, the market's actually going, let's actually go to the short-term chart of the futures so you can see what's going on here. This is what's gone on since yesterday. And we're actually much lower. We're kind of actually recovering from that a little bit right now. So the market is in a bearish Bad news following up yesterday's news of the FOMC. And like I said yesterday, we should get some follow through today. So we're going to start out with stocks to short sell. And we're focusing on the energy stocks, energy sector. You can see some of these FANG, particularly yesterday, bounced. Setting up is now a bear flag, looking for a new sell short here. I'd actually prefer a higher opening here, which we're going to get. So push here, higher opening, looking for it to roll over. But you know what? Before we get into that, I want to talk about two stocks that are interesting on the long side. Well, one stock on the long side, and the second stock is a popular stock that everybody's watching. Roku, actually, this was the previous breakout level. Had a well-bid day, closed above the open, closed above the previous close. Although it's set to open lower at the rest of the market today, I still like this, and especially having an alert set for 168. It looks like it's going to open up below 168. That's the level we've been watching. You can see it here. You can see it here. You can see it here. And now kind of dancing around it again. Above 168 is the level to be watching in Roku today. Apple is the one that's on everybody's mind. Looks very, very similar to what the SPY ETF looks like right now. But a little bit uglier here than I think a lot of people expected. The stock split, everybody's expecting it just to take off again. And 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 8 out of the last 10 days, the stock has closed below the open. So the stock is not trading independent of the market anymore, and something has changed. So because the tape has changed, you can't get in there blindly and just say, I'm going to be buying every dip in Apple. We need to see some minimum criteria. We actually thought we had it here on this open when we had well bid and open higher, but selling came back in over the last 2 days. So if you're a long only Apple, minimum criteria you need right now is well bid on those daily charts. But we also do have AAPL, which was called out by John O'Connor in the community in the boot camp. Look, inside candlestick breakout, penetrating 2 levels that have finally punched through. Going to open a little bit lower today, which actually sets up a new swing trade long on a lower opening, looking for a push to the upside. BEKE was a trade that we made late in the day yesterday after the FOMC announcement and the market was getting hit. And you can see there were 2 different opportunities to get long here. So congratulations to everybody in the boot camp who took those trades yesterday. Despite the market getting crushed, we had some really good opportunities. And that's the value of being in a community. The community is lifting each other and finding ideas once you understand what a good idea looks like. The problem now with the stock is it is now 1, 2, 3, 4, 5 days well bid, opening much higher this morning. This would be a morning where I'd be looking to book profits. It would not be a morning where I'd be looking to initiate a new swing trade. Opening higher with the market getting hit, pushing higher off of that, I'd be selling into that as opposed to looking for a new swing trade. I'd love to see the stock pull back a little bit, maybe into the 56 area, looking for a new long. DraftKings has been pretty good, actually punched through, well bid, staying well bid. Lower opening, kind of neutral, which is pretty good. I'd still like to see the stock pause a little bit. I'd love to see it get down somewhere in the 46 area, hold above the 42 breakout, and then look for another longer term trade above this level. On the long side is Workhorse as well. Again, inside candlestick breakout, another one, still looking to be long the stock, and you can initiate a new swing trade because that inside candlestick is technically a pause, looking for a new move to the upside. I don't know why I'm losing my voice. SYY, another one. That really what I'm pointing out here is there is opportunity in stock-specific ideas as opposed to just having this global picture that the market is a short sale and panicking because the market's down pre-market. So again, you need criteria. If you want to separate yourself from struggling trader to tape reader, you got to get into the boot camp and understand how to read and find these kind of opportunities. And believe it or not, in the financial sector, one that is actually looking interesting is Capital One Financial. You can see that we keep making higher highs and higher lows, and we peaked out yesterday. Interesting, right? Definitely something that's going to be on the radar. On the short side, we're going to continue with those stocks that meet the criteria. ZI, Zoom Info on the short side. Hess, getting back to the energy sector. CVX, XOM, and finishing up with the financial sector of Citigroup, which traded into a consolidation after getting hit. And this one actually traded lower prior to the market actually going down. So this was actually showing relative weakness before the market took a little bit of a hit. So that's what we're expecting follow through to the downside. 40 would actually be the first target on a short sale in Citigroup. So there's a lot to pay attention to today. Look, you signed up for this job. You took the responsibility of wanting to have that unlimited upside. Now you got to put on your big overalls and say, I'm going to go in there and dig the money out of the market. as the market gets a little bit more challenging, you got to rise to the occasion. Let's see you do it. I'll speak to you soon.